This is Matthew Cratter from Trader University, and today I want to talk about how to be evil like a central banker. If you're interested in learning how to make money in both bull and bear markets, learning how to understand how the economy really works, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So a lot of you have been asking about Jerome Powell's speech, which he's scheduled to make today at the virtual Jackson Hole Symposium, which is when a lot of the international central banks get together and talk about how to do evil things, as well as the new inflation targets. So I thought I'd talk a little bit about that. And it all comes down to this chart from Bloomberg, where the red line is the Fed's targeted inflation rate. They're very open about this, saying, we want to destroy your purchasing power. We want to make prices go up by 2% a year. And that is what they're saying when they say they want 2% inflation. They want your $100 today, next year, to be only worth $98 in terms of its purchasing power. We can see here that the actual inflation, as measured, I believe it's by the CPI in this index. They may be using another one. It looks like the CPI to me the actual inflation has been consistently below their inflation target. And so what to do about this? There have been a lot of policy rumblings, a lot of leaks to the press, or planned leaks to the press, saying that the Fed is now going to take a new approach to inflation, where they're going to be a little bit more relaxed about it, and they're going to look at average inflation rather than absolute inflation. So in the past, if inflation started trading above this 2% line, everyone would freak out and they would tighten rates. But now what they say they want to do, and Powell's expected to talk about it in his speech today, is they want to target 2% average inflation. And so what this means is if you spend a lot of time below this line, just because of the way averages work, you now need to spend a lot more time above the line. In other words, they're open to allowing higher rates of inflation so that the average rate of inflation comes closer to 2%. And we saw Kaplan the other day saying inflation can run moderately above a 2% goal. On the other hand, if you've had a lot of 1% inflation, doesn't that mean you need 3% inflation to get back to that 2% average? But this is basically how it works and what the Fed's been doing. So basically, over the last 20 or 30 years, the federal government keeps changing the rules to the CPI index, which is how inflation is officially measured. And they keep doing this because in the 80s, they were getting some very high inflation readings that they didn't like. And so they kept modifying it until they got an inflation index that showed much lower inflation, as we saw in that previous chart. So first do that, change the measurement, change the index so it hides high inflation. This is how to be an evil central banker. Next, put the bond vigilantes out of business by capping Treasury yields. Now, who were the bond vigilantes? They were famous in the 80s and 90s. These were basically just bond market investors who, whenever they saw that the federal government was spending a little too much money, that they were worried about inflation in the pipeline because they lived through this period of the 1970s when there was very high inflation, or when it was at least still being honestly measured by the CPI. And so what the bond vigilantes would do is they would just dump their bonds, which would raise yields, raise interest rates, and send a message to the Fed and to the federal government as well that the deficit spending had to be scaled back and that there was possibly inflation in the pipeline and the Fed should raise rates. But the official policy now, and we've talked about this in previous videos, is a policy of yield curve control, where the Fed, at least surreptitiously, has committed to keeping Treasury yields, especially the 10-year note, the 10-year Treasury, which is a government bond, keeping those yields really low. They haven't said where they're going to keep them below, but we can be pretty sure, simply because the federal government has so much debt, that these yields can never be allowed to rise very much again. And then obviously quantitative easing as well, where they print up new money and buy treasuries with it. And so what this means is that the bond market is no longer providing free market price signals. Its value in terms of information signaling has been totally destroyed by the central bank. Meanwhile, we talked about the modifications to the CPI index to make it look like inflation was much lower than it is. If you look at the Chapwood index and similar indices, we can see that the inflation rates that they're measuring, and they do it by cities, but 12% inflation over the last 5 years. These are annual numbers, 12% for LA, etc. You can go down the list. but even the cities, for example, like Phoenix, which have had relatively low inflation compared to higher cost of living places, still 8% a year rather than the 1 or 2% that we were seeing here. So these are the steps to becoming an evil central banker. First, change the components of the index and the targeting method of the index that you're using to calculate inflation. Destroy the signaling value of the bond market by capping Treasury yields, and then have the nerve to complain that inflation is not high enough. Oh no, we're not hitting our 2% inflation targets. We need higher inflation. In other words, we're not destroying your savings and purchasing power quickly enough. Anyone who's lived and earned money and spent money over the last 10 or 20 years knows that the inflation rate is much higher than 1 or 2 or even 3%. But this is one of the problems when you begin to target numbers, as the Fed has done with the CPI index. You can manage the economy and you can destroy other parts of it, all the while trying to keep a certain index looking good. Now, even a 2% inflation rate is pretty brutal, because it means that after 20 years, you've essentially lost 40% of your purchasing power. If you have $100 and it goes down 2% every year, it's a little bit less than this because of the negative compounding effects. But basically, you've lost 40% of your purchasing power after 20 years. And this is on money that you've earned, that you've paid taxes on. And so inflation is a hidden tax by the government or by the central bank. And in spite of this, in spite of the fact that everyone knows that deflation is actually good, paying lower prices for fruits and vegetables and washing machines and computers is actually a good thing. And technology has this property of creating a lot of deflation. So for example, with your iPhone now, you can do thousands of things that you used to need a stereo player and a compass, etc. Now it's all in an iPhone, etc. So deflation, technology is deflationary, but central banks like inflation, and especially big governments like the US government that has a lot of debt like inflation. If you have a lot of debt, inflation is good for you. And so what all these fancy headlines are about is basically the Fed saying we need to destroy your savings more quickly. We need to destroy your purchasing power more quickly. We need average inflation targeting. And it makes sense when we realize Jerome Powell's background. I like this meme where he's being sworn in, solemnly swearing to do everything within his power to keep the stock market inflated. Jerome Powell is really the first. He's the first central banker, the first chair of the FOMC, the first chair of the Fed that I remember who's not an economist. And I'm not a huge fan of mainstream economists, but Powell is the ultimate. He's the ultimate rent seeker. He's a lawyer. He's an investment banker. He is a private equity guy, and he's a think tank guy. Now, rent seeker is just someone who basically kind of leeches off the current system. They don't create anything of value. In other words, they move around interest rates. They leech off the government. They print money for their friends. They print money for Wall Street, and they don't create any new value in terms of technology or investments or anything else than that, like that. They're basically more involved in financial engineering or anything else, which is really what private equity does, where you take a company private, you load it up with debt, you fire a bunch of people, and then you try to take it public again and sell it off to naive retail investors. And then usually a couple years later, these private equity funded companies end up blowing up because they have too much debt. And so this is the guy who's in charge. And it's absolutely unbelievable. I found a interesting target here that I think is important to interesting diagram that's important to think about, especially when you're thinking about crony capitalism and rent seekers. A lot of people, if they watch my videos and they watch them sort of superficially, they think I'm a socialist, that I'm against wealth, etc. And I'm not. I think that they think that I'm saying the rich are bad because I'm constantly talking about central bankers, etc. But here's the right enemy, as far as I see it. It's not hate the rich and be pro non-rich, but this is the correct enemy here. The people, the crony capitalists, the people like Warren Buffett, the private equity guys, the rent seekers, etc. And then the rich who are in this little area here are the Elon Musks, the Steve Jobs of the world, the people who obviously deserve to be rich because they've created new technologies. They've actually created new public companies, new technologies. They made our lives better, as opposed to investment bankers, central bankers, private equity folks, think tank folks. This is one of the problems is we have these revolving doors between all these groups, and they basically control the central bank, as we've seen over the last 40 years, really. And so what they do is very good for their friends on Wall Street. It keeps equity prices permanently high. It keeps real estate prices permanently high, but it's completely unfair to a new generation that has to grow up and buy stocks and buy houses to raise their families in, that these asset prices are kept permanently high for the sake of these special interests, these inside interests, these central bankers. So that's the guide, how to become an evil central banker. I'll link to a couple more of my videos on inflation and the government lies about, in case you're interested in learning more about government, inflation, propaganda. The good news is that there are still some honest barometers in the world. The Fed can manipulate the bond market, but it appears no longer to be able to really manipulate the gold market. We've seen such a huge run up in gold this year, and as well as Bitcoin. These are sort of the honest thermometers in the room that tell you the real temperature of inflation, of the debasement of the dollar, and the loss of purchasing power. So all I can say is thank goodness for gold and Bitcoin in a world of evil central bankers. Be sure to hit that subscribe and like button if you found this video helpful. Let me know your questions and comments in the comment section below, and also any suggestions you might have for future videos. Thanks a lot for watching, and I'll see you in the next video.